Hello guys, welcome to this final part of the fundamentals chapter of this section or mastering the art of transfer pricing in 9 days. Day 2 last topic that is going to be over within few minutes. Hope you have liked the fundamentals part entirely. If you have not understood or if you want further clarification on certain aspects, put down your queries on Telegram community, be proactive, be active in that community, share your experiences, which learning experiences which you have got from that particular part. Now we'll go ahead and I'll share the mind map of section 92BA which deals with specified domestic transactions. Now before I start that part, let me just tell you one thing. Why I keep telling that there is nothing new to that part. It is just an extension, or it's just an something which the government has introduced so that we understand that the transfer pricing would be applicable on that part as well, on that particular transaction as well. Let me just tell you that fundamentally, even if that transactions are to be benchmarked, the benchmarking process will always be same, even for benchmarking international transaction or benchmarking the specified domestic transaction. The benchmarking process will always remain same, the methods will remain same. Why there is a distinguish between these two parts is international transaction, though we understand that there could be a base erosion to a different country, right? Tax base can be eroded to the other country. But why they have done in specified domestic transaction is, and why they have captured certain amount is because there are base erosion possibilities within the country also. Technically, when a resident who's there, who operates from a domestic tariff area, with the other resident who again stays in domestic tariff area, then there is no there is no tax base erosion because that's a tax neutral transactions. But if a taxpayer has an undertaking in domestic area and the other part of undertaking lies in probably sales or pharma sales or IT sales, so there are two undertakings of the same taxpayer, then in that case the tax base erosion is possible, and that is where this SDT provisions are there. Many countries do have provisions with regard to domestic to take this transfer pricing analysis on the domestic transaction as well. One of them could be Singapore. I'm not sure. I'll have to check, but yeah, there are countries, developed economies, those who also apply the principles of transfer pricing on domestic transactions in particular scenarios only. Unless until there is no tax based erosion, a government not implement that particular provisions, right? Now I'll just move to the mind map. So guys, under specified domestic transaction, which is section 92BA, we have two things to discuss. First is the coverage, and the second is fundamental aspect to be considered while dealing with 92BA. Now let me just move on to the coverage part. Alright. So as you can see that any transaction, so coverage basically the scope where you need to apply the SDT provisions, and so the transactions which can be classified as SDT, and appropriately you need to undertake transfer pricing analysis in such scenarios. See, technically what I've told you is that in case there is an entity which is undertaking a transaction with the other undertaking which is there in sales, then in this type of scenarios where the other entity is enjoying some tax deductions and tax exemptions, then in such case you are required to take the analysis. There are certain aspects also which will come ahead. So now what is the coverage of the SDT? Now any transaction referred to in section 80A. 80A is basically the first section of chapter, deductions chapter, that is deduction to be made in computed total income. So if the transaction, the coverage of that particular SDT lies under 80A. So this is that coverage that any goods or services sold or supplied or acquired or were sold or acquired by the undertaking or unit or enterprise or eligible business in the open market. So this is what the transaction is, which is covered under the ambit of SDT. I'll move ahead. Second type of transaction which is covered under the ambit of SDT, that is 92BA, is any transfer of goods or services referred to in subsection 8 of section 80IA. That is deductions in respect of profit and gains from industrial undertakings or enterprise engaged. This is basically title of 80IA, that is deduction when you take the deduction under 80IA on account of some industrial undertakings and enterprise engaged in infra development activities, right? So where any goods or services are held for the purpose of the eligible business are transferred to any other business carried on by the assessee, or where any goods or services held for the purpose of any other business carried on by the assessee are transferred to eligible business, right? So this particular sections also define what is eligible businesses, and in case if there is a transfer of goods and services to that eligible business, then also you are covered under that particular transaction is covered under the ambit of SDT, right? Now, you need to understand that one thing, that not every person transacting with an SDT or the unit which is there in a SAYS gets covered under this particular type. It is only the related party or the relationship which is from which it can be established that there is an influence, there is an association between these two undertakings. Then only you have to apply this particular section, particular provisions. We'll just move ahead. Any business between the assessee and the other person as referred to in subsection 10. So previously we saw subsection 8 transactions are also covered, and then they have also included any business transacted between the assessee and the other person as referred to under subsection 10 of ATIA. So when it appears, so now here it's a condition, right? Even the assessing officer has the right to implement the transfer pricing or trigger the transfer pricing provisions, but under some circumstances only. So when it appears to the assessing officer that owing to the close connection between the assessee carrying on the eligible business to which this section applies and any other person, or for any other reason the course of business between them is so arranged that the business transacted, right, previously it was goods and services, now they are discussing on business transacted between them produces to the assessee more than the ordinary profits which might be expected to arise in such eligible business, right? So technically giving of loans, guarantees, infusing of more funds, pending receivables, payables, etc. could be included in this particular, because they are not defined any business term here. So probably any transaction which has been happening between these two particular persons, and where the assessing officer thinks that there could be tax based erosion on account of that particular arrangement, then he can also implement the transfer pricing or trigger the transfer pricing provisions. Then any transaction referred to in any other section of chapter 6A or section 10AA to which provisions of subsection that is 8 or subsection 10 or 80 IA are applicable, correct? So in case if the entities are also taking exemptions under section 10AA, or they are any other also, chapter 6 is entirely covered here. So any transaction referred to in the chapter 6A and 10AA also, to which provisions of these subsections will also apply, they are also covered, right? Now any business transacted, again if you see the term any business transacted between the persons referred to in subsection 6 of 115 BAB. Now what is 115 BAB? BAB was introduced probably in 2019, where the government came with a concessional tax regime for certain manufacturing companies, and recently also the government came with 115 BAE, which is a tax concession to some manufacturing cooperative societies. So if the person is doing transaction with the entities of 115 BAB, right, if the enterprise, also enterprise is doing this transaction with the enterprise who is availing this 115 BAB, then also the transfer pricing provisions will be applicable on such transactions. Now I just come to fundamental aspect which are to be considered while dealing with section 92BA. What are those aspects? So just for your simple understanding, okay, this could be a bit confusing. It was confusing for me also, when I was reading SDT, not right now, but yeah, when I read it for first time, I was of also confused mindset that what is SDT, why it is there, why it is difficult to, I was just seeing ATIA and I was just thinking what type of transactions are covered and etc. doubts I had. Technically, transfer pricing you need to be very clear on fundamentals. Why there is a transfer pricing provisions? Because there is somewhere a tax based erosion happening, right? And that is where transfer pricing provisions are there. Simple as that. And that is where you need to implement those provisions. You need to undertake the analysis. It is as simple to understand that, right? So I have just given a simple example here to understand what is 92BA. I have already dealt with 92BA in one of my cases with my ex firm, where I'll just give you an example. It's a company which is based out of you can say Chennai. Now you must be knowing that there are many says around Chennai, right? Chennai or Tamil Nadu, there are many pharma says. So it's a pharma company, right? So they also had their unit in a pharma says. So the company was one. So they had one undertaking in the normal domestic area and the other undertaking in the normal sales area. That is what I also have written in this, explained through here in this example, right? Now they were transferring goods to the sales unit, and then after the sales unit used to export, process that, and obviously they used to export that goods to overseas market. So the transaction of selling of that goods by the undertaking which is in domestic area to the sales area, that was to be benchmarked, and that is how that is how we arrived at an arm's length price, because tax based erosion can happen in such circumstances. So this is what the example here is, right, where a taxpayer SSC is there in domestic area, it has its own unit also in domestic area, and it has another unit in sales area, or probably if not in sales, then there is an other manufacturing entity of that particular taxpayer who's availing this concessional tax rates under 115 AB or BAE, correct. So in case if there's a transaction between these two parties, then they are covered under the ambit of 92BA. Now that is what the coverage of 92BA is all about. Also, we need to understand one thing, that there is a threshold limit, right? Not every type of transaction is covered. There is a threshold limit on the entire amount of transaction. So in your case, if the transaction value goes beyond INR 20 crore transaction value, then you are covered under the SDT regime and you are required to undertake a transfer pricing analysis for that particular part of transaction. I hope that clarifies. It was simple, easy to understand, and this clarifies. Transfer pricing, you need to understand the fundamentals. So please stick on to the fundamentals and learn and enjoy. I hope you are enjoying this learning journey. See you soon tomorrow. Thank you.